Hi, folks. How was your weekend? Good.
Good.
So apologize for the late start. I'm just legitimately curious. I know I probably asked this question in my other classes, but I'm pretty sure I've not asked it in this one. And if I have, well, I apologize. Is there like a campus policy for like if the instructor doesn't show up, like how many minutes you have to wait before you just basically say, all right, no class? Like 15 minutes?
I don't know if there's an actual policy, if I'm being honest. Yeah, I do kind of feel that way. If the professor doesn't have the respect to show up on time, yeah, I'm out.
Yeah, well, I'm just curious, like if you're like 1 minute, like the third, if it's 11:31 and I'm not here, it's like, yeah, see you. If it just be like that. I'm assuming that's not the case, but it dawned on me. So just a real quick background, I am in conducting the management faculty search. We're interviewing the management faculty candidates. We got one today and then we got one on Friday, so I will likely be running behind on Friday as well. I promise I'll be here. Well, at least that's my plan to be here. But I remember back when I was in school and I was not a good student. Everybody in this room was a much better student than ever I was. So I spent a couple of years at community college, and community college professors, they varied in quality. I'm not going to say I didn't have some good instructors. I had some very good instructors. I had some instructors who basically was just like, oh, this is a second job where I can earn some additional easy cash. So I was taking a psychology course, and it was like hit or miss as to where the instructor would show up for class on time. And yeah, it was basically like 15 minutes that he wasn't there, we all left. And that was kind of the go for the semester. And I was just curious, has that happened to anybody? Has anybody like had like you show up for class and the instructor's not there and you're like, all right, I'm done, I'm out of here. I see a few nodding heads. So hopefully it doesn't happen to that much. We do try to pay you the respect you deserve as a before that. But yeah, and I guess technically speaking, you guys are paying us to be here. So if like we didn't show up for class and no teaching, it's like I want a refund. Okay, yeah, it's 50 minutes that I paid for that I didn't get, or an hour and 20 minutes. Okay. Maybe we're gonna have like a revolt on this, and you guys are gonna post. Like, Dr. Barnes insisted that we should be demanding refunds for classes we don't get, which I could come back to haunt me, considering that I think the Friday before break I'm already planning on us not meeting at class. I do want to clarify, if we don't meet as a class, is anybody going to insist on a refund if I give you guys a little bit early break? Because like, no, we'll somehow settle for that, Dr. Barnes. We'll struggle through it somehow. Yeah. All right, delaying the inevitable. Let's go ahead and get started. So before we get started with today's discussion, I do want to remind you, we do have our AI project that we're going to be working on. Hopefully you've started thinking a little bit about that. I know we're just kind of touching base, and we got thrown a little bit behind last week because of the weather, because of the schedule, the way things are. But I do want to have a preliminary deliverable, and I believe I've got it as an assignment on week 8. This is not meant to be something that's going to define your project. It's mostly just brainstorming ideas. There come some ideas of what some things that you'd like to work with AI. And again, this is not meant to be complicated. This is mostly personal interest about things that you think you can use for your AI for in your future. Start thinking about that. We'll define a few more things this coming week. I think we're going to talk about chain of thought this week. And hopefully it will give you some ideas on better prompts and utilize AI tools in certain contexts. But something to think about as we move forward. Of course, you can't spell AIS without AI. So let's get on to AIS. Let's talk about Chapter 6, which is purchases and payments business processes, or process, excuse me, which I'm going to refer to as the purchasing process. Depending on the scenario, you've heard this before. You've probably heard this is called the procurement process or the purchase process. I don't know why the book, again, throws the complex term in there. I think it's to try to pick up all the information in there. But the simple truth is it's a pretty straightforward concept. Basically, we're going to be talking about the position that we're the customer as opposed to being the supplier. So I think what you'll see as we start talking about this information, some of it's unique and relevant to this process area. Some of it's going to be consistent with what we've already talked about with respect to the revenue process. In fact, there's going to be a mirror image. In fact, I will say one of the slides that I provided for you all was actually, I just modified a revenue slide. And I'm not ashamed to admit that. I try to work smarter, not harder. But we'll talk about why I did that here in just a little bit. Let's get into the purchasing process. Let's get into the procurement process, procurement steps. If I use procurement, the same thing. All right. So revenues are the lifeblood of an organization. These revenues can only be provided if the necessary resources to provide them are available. So what resources am I referring to? Obviously, generalized categories. We can talk about goods such as inventory, facilities, manufacturing equipment, systems, equipment, or services, maintenance, janitorial services, equipment, and machinery repair. All the things that go into actually creation of goods and services for an end user, which would generally be our customer. Now, we can also kind of categorize labor as potentially being used as part of the purchasing process, but usually in most scenarios, we're going to consider that a separate functional area. We will incorporate labor to a very basic degree in our discussion of purchasing, but as far as the allocation of resources associated with labor that you've probably gone into much more depth than other classes, we're largely going to leave that out. We're going to kind of keep this at a very basic level. Like I said, I want to keep this simple because it's already pretty complicated as we already know about. All right. So let's talk about some fundamental functions of the purchasing process. And this is going to seem very familiar again because it's going to look like what we talked about with the revenue process. So departmental organizational requests for goods and services, which is very similar to when we talk about customers sending us a request for goods and services. They're requesting information about what the prices are. Within an organization, if we want to make a purchase, then we've got to send a similar request. And that's going to be authorized usually by an internal party and an external party. But departmental organizational requests saying, we need this, can we have this? Some of it's pretty straightforward. It's like, we need raw materials for manufacturing inventory, can we have raw materials? And that's obviously yes. Some of it's a little bit less obvious. Some of it's a little bit like, okay, I need a book so I can actually perform research and learn how to do this particular task for part of my job. That's more straightforward. One that I've constantly asked for, but have been shot down, is I've been asking Dr. Caton, who's my boss, the department chair, can I actually set up a kitchen in front of my classes? Because I will say right now, when I'm talking and I'm lecturing, it's hit or miss as to whether students will be engaged or be interested in that. But if I'm cooking, everybody's going to be involved, okay? And I think that I could actually. She said she wants evidence of this, so maybe I should bring up a hot plate and actually make some flapjacks for everybody while we're teaching class. Haven't actually got the courage to that yet, but we'll see. We'll see. That's the goal. That's a departmental request that's been shot down more times than I care to account. Ordering requested goods and services. Once it's been approved, then we're actually going to get the goods or services. Receipt of ordered goods. That's when we receive the goods that have been ordered. Services are rendered directly by the requesting party. So basically, if we're talking about like custodial services, that'd be somebody coming in and making sure they clean up clean up the place, take the trash out, whatever it might be. That's not going to be something we put in a warehouse, but it follows a similar conceptual framework when we think about the acquisition of it. Then we have authorization of payment on supplier invoices. Keep in mind that we're still operating in our business-to-business environment assumption, which is different from our business-to-customer assumption. Business-to-business environment says that we're going to be granted credit as opposed to granting credit in this scenario. So when we ask for a request for a supplier, they say, all right, you will pay in 30 days or sooner, you may get a cash discount. So same kind of philosophy we held with back with revenues. And then, of course, because we're good people, because we're a good organization, a stand-up organization, we're going to pay supplier invoices, all right? By the way, I will tell you right now, if you ever get into a scenario where you work for an organization where they try to encourage you to delay supplier invoices past their date that they should be due, you might want to take that as a red flag or a warning sign that that's not a good organization to work for. One of my interesting stories, my brother is a musical theater major. He was a musical theater major, which of course meant that he moved into restaurants, okay? And I give him a hard time about that, but he's actually a very, very incredible restaurant manager. He actually runs his own personal catering company now. But several years ago, he was working for an organization where they were saying, all right, I want you to order a whole bunch of goods and services from the suppliers, and then we're about to declare bankruptcy as an organization, so we don't have to pay them back. That's what he was told. He was told by his bosses, order as much as you possibly can on the credit line that we have, and then we're going to declare bankruptcy and never pay it back. And he straight outright refused his boss from doing that. He said, nope, I'm not going to do that. That is a garbage way to do business. And he was absolutely right, okay? If you ever find yourself in a scenario like that, you may want to reconsider whether you're in the right position. I know that's probably like, well, it's my job, Dr. Barnes. I don't want to lose my job. If you're in a business situation like that where they're saying we're going to declare bankruptcy and not pay our suppliers back, probably not a good livelihood sign for the organization you're working for. But I hope that nobody ever encounters that scenario. That's just kind of an interesting one coming up. In fact, this is all to say that we pay our supplier invoices. We always pay our supplier invoices because we're good business people. All right. This should look pretty familiar. So let's review purchasing transactions. We're going to have two transactions that we need to be very aware of, need to know of relevance. So first one is going to be our purchases, when we actually acquire goods, and we can actually include services on here, but we're going to keep it, again, pretty straightforward. Depending on the inventory method that we're using, this could be debited to purchase or inventory. And you're going to ask, Dr. Barnes, do we need to know the difference? The answer is no. If I ask you for the journal entries on this journal entry for this on the exam, if you put purchases as the debit, that's fine. If you put inventory as the debit, that's fine. I'm not going to specify whether you're under a perpetual or a periodic inventory system. There's no need of reconciliation for it. The truth is, it's been a long time since I've taken financial accounting. And so I don't remember exactly the process for reconciling a periodic inventory system. So I'm not going to test this. You guys don't know the journal entries when they were a little bit fuzzy for me. But I do want you to note that this is a possibility for either type of system. Purchases would be a periodic system, inventory would be a perpetual system. I think it's probably easier to do perpetual, just inventory, accounts payable, just move on with your lives. But this is going to be our recognition of when we receive the goods and services. And keep in mind, this is going to have an ancillary step to the revenue process. When does our supplier get to recognize revenue? It's basically the same time that we recognize the liability for payment. Okay, and we'll see that in our diagram here shortly. Then we have our payment, okay, accounts payable and cash. So we make payment on it. You will notice in here we have purchase discount. So how many days did it occur from the time that the transaction was received to the payment was rendered? So it looks like 10 days, okay? Remember I wrote on the board last Monday, I said 2/10 N/30. I'm not going to write it again because my handwriting is atrocious. But we said 2% discount on payment if it's paid within 10 days, net within 30. It looks like that we're the customer and we got those terms this time. So we're recognizing a cash discount on the payments, okay? The 2% discount for early payments. So at its core, all you really need to know here is you need to know that accounts payable is going to be our debit because we're writing off our accounts payable that we owed from this step up here, and we're crediting cash because that's what we pay. On the journal entries for the exam, you do not need to worry about the discounts. I'm just trying to explain what the discount is here. Again, we're going to try to keep this pretty simple and straightforward. This is not the focus of what we're going to be talking about, though. What we're going to be talking about is how this relates to a systematic representation. So our BPMN diagrams and our UML diagrams coming up. All right. Now, let's go ahead and talk a little bit about our scenario or step through process so we understand what's going on in the purchasing process. So researching prices and product availability, selecting the best price and availability combination, and sending a purchase order to the supplier. So once we've decided what it is we want and what's the supplier want to purchase from, then we're going to say, all right, here's a purchase order to the supplier. The supplier goes through their own due diligence and says, all right, we're willing to do business. If that's the case, we receive the items to the supplier and record the purchase in accounts payable. And then we'll pay the supplier according to the credit terms. Now, there's a few notes here that I want to make a quick note of. This is a very simple and straightforward process. Very, very easy to understand. There are a few things to know. First of all, supplier and vendor, those terms tend to be used interchangeably. I tend to use the word vendor more frequently than supplier, but I will use those terms synonymously. So if you're a supplier, if you're a vendor, they mean exactly the same thing, okay? And they will come up multiple times in different scenarios throughout the book. Secondly, up here, there is a step that's technically missing here, and I probably should include it, but it's not really included in the book's description, which is why I don't write it up here. So after we receive the item supplier, but before we pay that supplier according to their credit terms, should we receive a certain document from the supplier? Probably so. I wouldn't have mentioned the document otherwise. Okay, what is that document we received from the supplier that basically says, hey, you owe us money, please pay us? The invoice, okay? The supplier would send us an invoice. Now, is it intuitive that this should probably happen? Probably so. It's not included in the description, but I do want to mention that because we will see that on the diagram here in just a second. It's an intuitive step that we would assume takes place. It's just not specifically detailed in the example. So even though, so this is kind of an important note. We're talking about diagramming. If there's an intuitive step that's not included in the narrative, if you include it in the diagram, that's perfectly fine. If you leave it out and I did not include it in the narrative, that's fine too, okay? But I do think this is an important one because how do we know how much we're going to pay the supplier if we don't have that invoice? So that's why I wanted to include that item in here. All right, let's go to the BPM diagram. And the reason I mentioned the invoice is because the BPM diagram on 171 actually differs a little bit. I added this receive invoice step here. It's flawless. You can barely tell that I added it in there, okay? It looks a little bit different than everything else, but it's otherwise just flawless. It's perfect, okay? That's my keen art skills at work here, my keen art skills at work. So what's going on? We start out, we say, all right, we need some goods and services. Identify a vendor and say, hey, how much is it going to charge? They give us the quotes. Then we say, we're good with that quote, place the purchase order, receive the items. Then we receive that invoice. And once the payment number of days has come up, however much time has elapsed, we send payments and that ends the transaction. Simple and straightforward. Very simple purchase process. As before, when I talk about, this is, for BPMN diagrams, this is about the highest level of complexity for generation. So remember we talked about in the revenue process, I said, this is the revenue process. You're gonna have a single lane diagram. That's all you will need to be able to replicate for the exam. Same is true here. You will need to be able to replicate this level of a diagram for the exam. So make sure you're familiar with it. On that note, there are a couple of interesting points. One of these is documented in the diagram. One of these is not. Remember, we had two transactions. We had two journal entries. One of the journal entries was, when do we record the recognition of the liability? Or when do we record the purchase? Obviously, that's going to be when we receive the items, okay? When the goods are shipped to us and they come to the warehouse, we can say, all right, we have the items. We now have a liability to pay the supplier because they have met their end of the bargain. The second one's not documented in this diagram, but I think it's pretty intuitive. When do we recognize the cash payment? So we actually pay the supplier according to the terms. We send them cash, or electronic version of cash, an electronic transaction. But regardless of what it is, we pay the supplier. When do we recognize that payment? Again, not meant to be a trick question, but it's pretty obvious when it says send payment right here, okay? The only reason I don't mention that, this is a document that's pretty much drawn from the book, but I do think it's important to recognize both parts of the transaction. Even though this should be an obvious one, you should say, all right, it's going to be right here, Dr. Barnes. We're going to recognize payment at that point. We send payments, okay? What do you want me to tell you? Do you want me to tell you when the sun rises too? Because I can look out a window. That's pretty obvious as well. I know I'm asking obvious questions, but it's really important to reinforce these because we got to recognize the correlation between the steps. All right. Now, the next step is we're going to move on to more complex versions of BPMN diagram. And like I said before, this is the only one that you need to be able to replicate. The other ones you will need to be able to interpret if I provide them for you. That being said, this is what the book provided for the basic supplier interaction model. And I'm going to tell you right now, I hate this, okay? If you want to stab your computer screen right now, please don't, okay? Please don't. These are expensive pieces of machinery. But you basically can ignore this diagram right here. I included this because this is the one that's in the book. And this looks nothing like the BPMN diagrams that we've created before. First of all, it doesn't show any of the activities. Secondly, it presents it vertically rather than horizontally, okay? So what I did, remember I said that I took the revenue process and I actually just took one of our revenue slides and changed it over to one of our vendors, our purchasing slides? Yeah, this is basically the basic supplier interaction model. This is my revision. And basically all I did is I took the same set of interactions that we looked at the revenue model. And instead of saying that we're dealing with sunset and customer, I put sunset up here and the supplier down here. All right. That's my level of innovation for you guys right there. It doesn't get more complex than that. That's the innovation I provide for you. I did do a few other modifications for this, but this is kind of the same direct model. And this tells you something important. Because even though we've got all these engagements and interactions, the fact that I basically took a revenue model and just flipped it into a purchasing model should give you a lot of clarity as to what kind of, how related these two processes are. In fact, you're not really learning two separate process areas. You're learning one process area and then flipping it to learn the other process area. That's really all there is to it. So you can kind of see here, sunset is basically we're operating on here. We said, give us some information. They send us a quote. We place the order, send them the purchase order. They receive it, prepare it, deliver it, receive our delivery. They're going to send us the invoice, and then we're going to make payments on that. That's all there really is to it. So if you memorize this back from the revenue process or learn this from the revenue process, it's the exact same thing. All the only difference is that in the purchasing process, we're now the customer as opposed to being the vendor. Okay. So that's kind of a neat little summary with respect to that. All right. Now, this one is a little bit more difficult to interpret. This is kind of the high-level interaction. This is with multiple pools and multiple lanes. And one of the reasons I think this is important is because it does talk about a few of the nuances that we're going to encounter within the purchasing process. I really wish they'd done this for the revenue process, but I think that we can go into a little bit more detail here. Because as we note, first of all, when we start talking about this in NetSuite, a lot of our transactions, a lot of things that we're going to be doing moving forward are going to be within a certain process area. And I'm going to specify what role would you take if you were in this process area. Because I've already said we were taking the role as administrator in NetSuite, and we get to see every single process area, every single transaction capability, which would not be the way it works in the real world. In the real world, you would see a certain amount of transactions that you can perform. Everything else would be grayed out or not available to you. So this is kind of interesting. It kind of says that within our lanes, our lanes are going to have different people who are responsible for different areas. So we've got buyers, receivers, and people in accounts payable, which are three basic process areas or process departments within our overall process area of purchasing. So the buyer is responsible for placing the order, issuing that purchase order that goes to the supplier. Once it's received, then it goes to our receiving group, which is going to be the warehouse. So they receive the items, they assess the items. This is an interesting step because we didn't include this in our basic diagram, but it's probably a really important one. Has anybody ever received goods that were incorrect? If you're not nodding your head, I'm going to assume that everything you've ever received has been correct. And if that's the case, it's great to be you, okay? Which I wish I could be like just like you, because I've received lots of stuff that's incorrect. Sometimes it works out to my favor, like I talked about last week when I was talking about Amazon and they send us perishable goods. I'm just kind of like, okay, score, free swag, okay? Sometimes it's a little bit less helpful. Sometimes it's just kind of like I don't even care. Like I won't name the pizza place, but I ordered a pizza a few weeks ago, and my favorite pizza, don't get sick, I apologize, is pepperoni, mushroom, and pineapple, okay? Which everybody's gonna be like, okay, I've lost all respect for you, Dr. Barnes. So that's fair. Okay, that's fair. But they only sent me pepperoni and pineapple, and it just was not the same. Okay, I just kind of like that texture, and I didn't want to have call the pizza place back and say, yeah, you missed the mushrooms, so you're gonna have to remake the entire pizza. I was just kind of like, if this is the worst thing that happens to me today, then that's gonna be the great day. Okay, so yeah, I just kind of dealt with it. But sometimes, you have to have the right goods, the right items that you're going to be able to use for production. So if you receive the wrong goods in production, like you're supposed to receive a certain type of metal and they send you a different type of metal and you can't use that for manufacturing, you've got to send it back, okay? And you can't commence production until you get the right item. So this is kind of the gateway that we're talking about right here. If it's correct, then we place it in inventory and then it's going to be used later on. So we actually say we receive the right goods, then we're going to pay the supplier. If they send us the wrong goods, we're going to say, yeah, you can take these back. This is not what we ordered. We're not going to pay for it. Well, if we're not going to pay for it, then it never goes to accounts payable, and that ends the process here. But you will notice one thing is missing right here. What's missing in this diagram? The one thing that I say I get really, really antsy about if it's not there, because I'm OCD. Yeah, that's the ending gateway. We should have a closing gateway here before we have the ending event, because we had decision point here. So yeah, the fact that we don't have a second gateway really, really annoys me. But ignoring that, it's actually pretty interesting. So what's going on here? It tells us a lot about what goes on in a real business and the kind of decisions we make. We can get a lot more nuance in this too. There's a lot more decision trees that we could, decision paths we could include here. But again, the more that we include, the more complex the diagram gets. And I want to kind of keep this simple and straightforward. All right, that's for BPMN diagrams. That's where we actually interpret this as human beings. What about the logical representation? What about the AIS representation of the system? Well, let's go ahead and go into a little bit of our summary. So, an employee selects a supplier and issues a purchase order. A purchase order is a promise of a purchase to the supplier which specifies the prices and quantities ordered. Okay. So I didn't specify purchase order earlier, but I knew that I was going to come to it. That purchase order document goes to the supplier and says, this is how much what we want, and this is what we will pay for it. Supplier sends the products to Sunset. The purchases are received by a Sunset employee, which triggers a recognition event. That's our first transaction, okay? The payment's due, an employee pays the supplier. That's our second transaction event. I didn't really iterate anything new on this particular slide, but there's a reason I wanted to go through this narrative or these steps is because I wanted to set up our next diagram. So we're going to be going into UML diagrams, all right? And instead of going like a multi-tiered process, we're just going to jump headfirst in. But before we do, I want to set the stage because we already know the UML diagrams have a few important core concepts related to them. All right. So the first few core concepts are the classes. We have to know what the classes are that we're identifying. What are our three classes again? Our three primary classes, the entities, resources, events, and agents. Good, very good. Okay. So we need to specify all of those. Now, what I'm going to do is I'm going to do a little bit different than what I did for the revenue process. Instead of starting with the events, because I think the events are a little bit subtle, a little bit distinct, let's talk about the resources and the agents. Okay. So our resources are going to be over here on the left-hand side, okay? Left-hand side, we're going to specify. What resources are specified in this particular narrative, okay? What resources are specified? So we're ordering one resource. We want to receive one resource. What do we call those? Call that inventory, call it products, something along those lines. Does that sound like a resource to you all? All right. What do we give up in order to receive those resources? Our time and energy, Dr. Barnes, our goodwill. Give up a lot of anger because we make sure that we get the right resources at the right time. What do we give up, guys? Very easy. Begins with letter C, 4 letters. There we go. Yeah. okay? So cash, we give up cash, all right? So that's one of our resources. We're exchanging cash for products. All right, what about the entities? The entities are actually clarified here on this, okay? This is not particularly difficult. One of our entities is pretty consistent with one that we've already talked about before. So who's going to be doing the ordering in our organization? Some employees, not specified employees, we just generalize as employees, okay? And then who are we ordering from? Are we ordering from customers? No, customers are unique to the revenue process, which I know I harped on that a lot last week, and I said, make sure you remember that, but it's a very, very simple slip to make. Who are we ordering from? Suppliers or vendors, okay? However we want to determine those, okay? So resources are products and cash. Vendors are going to be employees and suppliers. Now, what are going to be our events? There's a lot of room for interpretation on this one. We're going to start with a 3-event model, then we're going to move down to a 2-event model. We'll explain why here in just a second. All right. So first event is basically saying we're going to issue a purchase order. So issuing a purchase order is going to be our first event, or simplified, we're going to say purchase order. Now I'm going to clarify that in a true procurement system, this would likely involve a lot of sub-events associated with that. There will be departmental approvals, there would be a purchase request, there would be an authorization, there would be a lot of different events associated with that. Now, how many people want to chart 4 events versus 1 event? I'm kind of big on 1 event, okay? Because we want to try to keep that as pretty straightforward. Remember, every single activity that we add to this, the more complex the model gets. So this is a very drastic simplification, but a very necessary simplification. So once we have the purchase order, our supplier is going to say, all right, do we want to do business with this organization? That's the same kind of concern that we would do if we're doing business with another customer. We'd say, do we want to do business with the customer? And then we say, all right, we're happy to do business. The supplier will do the same thing. We're happy to do business. We're going to integrate into an event called a purchase. All right. So the purchase order is a request. The purchase itself is the actual transaction that happens. Okay. Going to be the actual transaction itself. Now, the purchase itself is going to involve a primary step of sending the goods to the customer, and we're going to receive those goods. But again, you could actually integrate multiple different activities within that process. Okay. We could actually say receiving is going to be an important step of process that. We could say the approval is going to be an important step. Again, we're simplifying for important purposes of trying to keep this diagram small and compact, compressed into a point. But it's important to note that we look at these events are encompassing multiple different perspectives, okay? The last one's a little bit more straightforward, though. It really only encompasses 1 event, okay? We notice that one of our resources is cash. What are we doing with that cash? Like me, you go to the bank every few weeks, you just take a few $100s out in ones, and you just go to your house and just throw them and then make it rain, okay? Has anybody ever made it rain before? I can't say that I've ever done that, because then I just like, I got to pick all these ones up now. Yeah, that's just like, it might be cooler for the $100 bills. You wouldn't mind picking up $100 bills if you had that, but who has that kind of money? Yeah, who has that kind of time? Anyway, what are we doing with the cash? Are we receiving cash from our suppliers? No, that we receive cash from customers. What do we do, suppliers? We're going to pay them. What do we call that? It's a disbursement, okay? A cash disbursement. So that's going to be our final event. Boy, that was a lot of explanation just to get to this right here, wasn't it? A lot of explanation, a lot of expository explanation, yeah. Exposition, yes, a lot of exposition. So again, here we got a pretty straightforward diagram that kind of shows the relationships here. It's important to note you do need to specify what the relationships are, and the associations do need to specify according to what the associations are and what their relationships are. The multiplicities are fairly straightforward to interpretation. Make sure you note that our employees pretty much interact with all of our events, as do our suppliers, so our agents interact with all the events. However, our resources only really basically interact with the events that they're directly relevant to. So products only relates to purchase orders and purchasing, which purchase orders would be that request step, purchase would be the receiving step, and cash really only relates to cash disbursements. All right. Anybody awed or intimidated by this right here? Hopefully not, because as I said back with revenue, this is what I expect you to be able to replicate on the exam, okay? Again, there's some room for interpretation. We'll talk about some deviations on that here in just a second. There's some room for interpretation on this particular diagram, but for the most part, if you can replicate this, you should feel pretty good about where you stand on the exam. Again, know it's a lot of knowledge. I'm asking a lot, but I do think this is really important. So make sure you're familiar with this. All right. So let's go ahead and formalize this a little bit more. Let's think about some possible iterations on this. This is where I expect you to be able to replicate. If I say create a diagram for whatever purpose, the purchasing process, this should be basically where your starting point is. There's room for interpretation on this. There's changes that you can make to this, particularly if we're talking about a different business model. But for the most part, this would be our standard. Okay. Now, a few things that we can consider here. A few things we can consider. If I assume that every single purchase in my organization requires a purchase order, could I conceivably merge these two events right here into one event? Could I just basically say, all right, purchase orders always have purchases. Therefore, every time I initiate a purchase order, there's a purchase. I can put these as one activity instead of two. That seems like a really, really nice step to me if I can do that. It's important to distinguish this as the first step, but if I think about this in a simplified model, if I assume every single purchase has a purchase order, then I can make this simpler. So that's one thing. Also, we talked about our classes, and technically speaking, there's 4 types of classes. 3 of them are entities, resources, events, and agents. What is the 4th category of classes that I say that you don't need to be able to replicate? Conceptual structures. Do we think conceptual structures might exist in this diagram? Yeah. Keep in mind that we already know a conceptual structure from our revenue process is that employees manage product lines. So we could actually include that in this diagram here. We also could it possibly be possible that we have management of employees and suppliers. Like we have supplier contacts within our organization, people who are basically manage supplier categories. That's a possibility as well. So we could actually make an association right here with this particular the employees and suppliers. So let's go ahead and look at another version of this diagram. This is going to be one that includes our conceptual structures. And it's a little bit more simplified, but also a little bit more complex in some regards. The reason I say it's a simplified is because you will notice we no longer have a purchasing event here. The reason why is we assume that every time a purchase order is generated, there's going to be a purchase. So they're one and the same, they're synonymous, which is a little bit confusing. It's like, why didn't we just make that natural assumption before? Is it possible that we could generate a purchase order and not generate a purchase? Yeah, it's certainly possible. What if we generate a purchase order and then go back on it saying, you know what, we're going to cancel our purchase order. We're not happy. Or the possibility that we generate a purchase order and the supplier says, no, we won't do business with you. That's probably our general point is that we want to make sure that this is our go-to, our default. But if we assume every single purchase order has a purchase, then we can make this a little bit easier. That's why this diagram looks a little bit different. Also, we got our UML, our conceptual structures here, but listed at the product categories. Product categories saying to be managed by employees. You will notice here, this is a very sloppy UML diagram because we've actually got some multiplicities missing. All right, we got some multiplicities missing. Let's talk about those real quick. So we got a multiplicity missing over here, which basically says employees are in charge of how many product categories, a minimum of how many product categories, and a maximum of how many. Intuitively speaking, if I were to try to interpret what the multiplicity should be right here, it's not presented in this diagram. This is saying employees are in charge of a minimum of how many product categories. What do you guys think? So I'll give you hints. 1, 0, 1, or many. So minimum of, probably not going to be a minimum of many. So it's going to be a minimum of 0 or 1. 50-50 shot. Let's lowball. Let's go 0. Okay. Why? Because you got to have an employee that doesn't manage any product categories. That's not their responsibility. That's not their role. So they got employees managing 0 product categories or a maximum of 1 or many. What do you think? Many. You can have an employee that manages multiple product categories. Okay. So 0 to many. Why did we actually go through this step? Well, because again, interpretation of multiplicities is really important. You might have to do this. You might have to do this on your own, even if you're not given this. So down here, we got some multiplicities missing down here. Multiple sets of multiplicities. All right. Suppliers can be in, suppliers have to be in at least a minimum of how many supplier categories? 1? Okay, yeah, they have to be at least 1. Otherwise, why would they be in the supplier categories at all? So 1, well, can the supplier be in multiple product categories? Yes, 1 to many. All right. Supplier categories can have a minimum of how many suppliers? 0. Okay, you could have a supplier category that you set up, but no supplier actually meets that category. But the supplier categories can have a maximum of many. Okay, you can have multiple suppliers in a single supplier category. That wasn't all that hard, was it? Yeah, it's pretty straightforward. Interpretation of multiplicities is a slow process, but a really important step in understanding. And even though the diagram from the book does not include the multiplicities, I think this is kind of an active exercise where it's nice to actually test and see if we can actually interpret what's going on here. And I think that was a pretty straightforward interpretation. All right. Is anybody now just sitting there saying, wow, I'm really enjoying this UML diagram stuff, Dr. Barnes? You know what would be great is we could take our UML diagram from revenues and we can somehow merge it with our purchasing diagrams. Anybody saying that right now? Is everybody saying that right now? Gosh, I hope so, because that's our next slide, okay? That's our next slide. So we can combine our revenue and purchasing diagram, and all this is taking events, or sorry, classes that are common between the two process areas and merging them together. Now, here's the deal. I don't want you to get too strung up on this, okay? I don't want you to get too strung up on this. First of all, I will definitely not ask you to replicate this in an exam. I have had students replicate this in an exam before. It was really impressive, but I will not ask you to do that, okay? Secondly, if you think, why is he being so blasé about this? Why does he say it like that? It's because we still have one more process area left, okay? And if you're asking, he wouldn't possibly include all three process areas in a single UML diagram. The answer is that's exactly what I'm going to do, okay? Because we've got inventory still to come up and we've got an inventory process UML diagram. So while this is a good diagram for starting point, this is not our final objective. We've got one more process area and we're going to throw the inventory in the middle here as well to show you how a fully integrated UML diagram is. Again, I do not want you to panic because I do think that it's important to understand this diagram. You will definitely not have to reproduce this on an exam. There's not enough room on the exam to reproduce these things, okay? That being said, I've been called to action because, like I said, I've asked questions about the integrated UML diagram, and I've had students that replicated the entire thing from scratch, and that's really impressive, okay? They didn't get extra points for it, but it was still really impressive. If I do ask questions about this, there will be some very, very specific questions I look for, such as what are the common classes between UML diagrams? This one's pretty easy. What do you guys think the common classes between our revenue and processes are? Probably our products, okay? Like that's a common item, especially if we're not necessarily going from a manufacturing process. We've not defined inventory. So at this point, we're just buying products and selling products. So they're the same product. Cash can be dispersed and received, but it's still the same old cash. And employees, these are the ones who are responsible for negotiating all those exchanges. So there's the common elements between those. Again, don't worry too much about this. When we talk about this, this is going to be a much bigger diagram, but it will be simplified in the fact that we're going to specify what is common and what is uncommon, or unique. I should say uncommon. What is common and what is unique, and that's what you're going to be responsible for. But we'll get to that when we get to inventory. That's going to be kind of the coup de grace for the inventory stuff. All right. Last thing I want to talk about. I alluded to this last week. We didn't have time last week because we were running low on time. But I want to talk about the controls. So we started out, we talked about business rules on Monday of last week. And I said, when business rules relate to controls, we talked about the different types of controls. With respect to information technology, does anybody remember the two categories of controls? So if you're forgetting, I'll tell you right now, it's on the slide somewhere. If you're forgetting, you need to know this for the exam too. It's like the exam, access and application, very good, okay. Access and application controls, all right. What party are we generally dealing with when we deal with access controls? What party in organization? The employees, or we could specify users, but for the most part, employees. We're going to see the term employees used a lot when we talk about access controls. When we talk about application controls, what entity is usually that we're referring to? The system, okay? Something the system does for us, okay? Now, we talked about this at a very, very basic level, the revenue process. I said I was going to go into a little bit more detail into purchasing because we have some time. So we do have time. So I want to take a look at this table right here. And the reason I say examine this table 6.1 on page 175, you're like, well, Dr. Barnes, it's right here. I say part of it is right here, okay? I really, really like this book. I don't necessarily like the way McGraw-Hill presents some of this information. This is just annoying, okay? So I tried to figure out a way to import this. Like, look at this scroll bar right here. There you go, all right? How do you put that in a slide? How do you put that in a slide? All right, so let's just go ahead and talk a little bit about what's going here. So the process step, they're talking about the area that this relates to within the purchasing process, okay? So that's pretty intuitive. The intention is saying, all right, what is the risk that we're concerned about? What is the risk that we're concerned about? So let's go ahead and take a look at this risk area. So we want to make sure we order products from reliable suppliers at the best prices to meet the required delivery time. So we'll talk about that as our risk area. Now, our risk would require setting up a business rule. Once we set up a business rule, then we can define what the control is. And we're going to use this as a pretty easy one. Our controls can take two functional forms within IT controls. They can control what the employees can do and what the system does. And so let's think about some ways that employees can affect making this particular risk right here. So I'm losing my voice because I'm so excited to talk about controls, so my apologies. All right. So ordering products from the reliable suppliers at the best available prices to meet the required delivery time. So there's a few risks there. All right. We're going to order from order products that are not the best available price, or we'll give them that not within the required delivery window. So are there a few things that we can do as employees to make sure that's the case? Yes, let's go ahead and move over. So want to make sure that employees that are preparing purchase orders cannot modify product inventory records, receive items, or pay suppliers. So why is that a risk there? Because if you have an employee that has the ability to make those modifications within the system, then they can make modifications to a supplier that's not necessarily authorized or not providing the best service, or even gives suppliers that cannot meet the delivery window. So we want to make sure that we have a separation of responsibilities here. That sounds very similar to something I talked about. Does anybody remember that picture of the car from a few weeks back? I said, if there's a picture of a car up there, and I said, this is something that I'm not just showing you, I can spell the word car, that this is really important. Remember, that was custody, authorization, recording, custody of assets, or authorization of transactions, recording of transactions. Those are three separate responsibility areas that are important within an organization. So if I have an employee preparing purchase orders, this is a recording function, all right? This is somebody recording. And so we want to make sure that they can't actually receive the items, okay, which would be an asset or a custody of assets function, or paying suppliers, or modifying product inventory records, both of which would be authorization functions, authorization for steps to happen within the system. So we want to make sure the separation of responsibilities occurs, because if we do so, we can make sure that we get the right goods in the right amount of time. That's basically what the risk is that we're trying to identify here. Moving on, that's employees. What's still left? We have the system. What can the system do? System provides purchase order, number controls, default values, and range and limit checks to create an audit trail. All right. So this is basically saying that whenever a transaction takes place, the system is going to record all relevant information associated with that transaction. That way we can review the transaction. If something is amiss, we can determine what was the source of the issue and why did it occur. So this is more of after the fact. This leads to an interesting question, okay? And we're going to talk a little bit more about this a little bit later in the course. When we talk about internal controls generally get categorized as either being preventive or detective and corrective in nature. So when I say preventive control, I'm trying to prevent something bad from happening in the first place, all right? When I talk about detective, I'm saying something bad has happened. I want to make sure I know if something bad happens so I can fix it. Does everybody understand the distinction there? Okay. It's like, all right, my preventive control, my silly preventive control was putting on shoes when I walk outside. Does everybody remember that silly example? Okay. What if I stub my toe? I said, man, I should have put on shoes. I'll put on shoes now. That doesn't make a difference. The problem has already happened. So if I stub my toe already, put a Band-Aid on my toe, which is probably an extreme reaction, but that would be a detective and corrective control, corrective issue. Say, I detect and stub my toe, ow, correct it, put a Band-Aid on. Let's take a look at these controls again, just to see what's going on. So we got our employee access control. Employee preparing purchase orders cannot modify product inventory records, receive items, or pay suppliers. Based on what you've just learned about the nature of controls, does this sound like a preventive control or a detective and corrective control? Preventive or detective and corrective? What do you think?
It's preventative because it's stopping them from making mistakes.
That's right. We're stopping employees from doing something they shouldn't be doing. So this is categorized as a preventative control. I like to use the word preventative, preventive. Either one is fine, okay? I try to use preventive because that's what the book says, but I do default to preventative at times. They mean the same thing. All right, let's go up here. System must provide purchase order number control, default values, and range and limit checks, and create an audit trail. Is this preventive or detective and corrective? So the system is documenting all things that are happening in the transaction and saying, here's a report on this. What do you guys think? That sound like it's preventive? Not stopping anything from happening. It's saying, look, if something happens, we'll detect it so that you can correct the problem. So this is a detective and corrective control. Does everybody understand the distinction? This is actually categorization of controls really, really important. So we're going to get into a little bit more depth in that, especially when we start talking about internal controls. But this is kind of your first implementation into the idea of preventive versus detective and corrective. Now, I will categorize detective and corrective loosely. Technically speaking, there are two categories of controls, but it's really kind of bad for one to happen and not the other to happen. Imagine if you have a detective control, okay? Say, oh, you broke your foot? Well, that's a shame. Well, take care. Yeah, that was like, okay, we'd like to have a correction for this problem. Similarly, corrective controls by themselves don't really do anything if you don't know what the problem is. So when you hear me say detective and corrective, those are going to be paired together. Preventative usually by itself, or preventive usually by itself. All right. So you've now experienced my first blurb on internal controls. It will not be the last. With that, we are all done for today. I will see you all on Wednesday for, I think, next week number 4.